Hi dear students, in the last class we had discussed on the depreciation model number 2. Okay, so in this model number 2 depreciation is there as well as the theoretical part is there. Okay, so now see first of all the depreciation. In the last class I had discussed, okay, what is my depreciation. So it is depreciation is nothing but the reducing the value of the fixed assets. Okay, there are two types of the depreciation, so which are the straight line method or the fixed percentage method, and second is the reducing balance method. Okay, so and in the last class we solved the problem on the straight line method as well as the fixed percentage method. Okay, so now we will see the reducing balance method means what. Okay, so reducing balance method means was whatever the reducing values is on that, again we have to calculate the, it means so again we have to reduce the value for the next year from that. Okay, so this is the reducing value method. So now in the same problem we will take Miss Hindustan Engineering Limited, Mumbai purchased a heavy machinery costing rupees 5 lakh on 1st January 2005. The rate of depreciation to be charged was fixed at 20% per annum. Write up machinery account for 4 year ending on 31st December 2009. Okay, so the machinery is purchased on 2005 and up to 2009 we have to calculate the depreciation. Every year we have to calculate the depreciation. Okay, and we have to use now in this session we will use the diminishing balance method. It means for the reducing balance method. Okay, so now see this on the 1st January machinery is purchased on 5 lakh. Okay, and the depreciation value is 20%. Every year we have to minus the 20%. Okay, so it is not fixed. In the last class we saw the fixed asset method. Okay, if it is one time it is calculated, it will be the continuous we have to use for the 4 years, that balance. Okay, so now in this case it's not like that. Okay, so now see here diminishing balance method. So under this diminishing balance method, so debit, just like that only you have to draw the format. Okay, debit side and the credit side. Okay, so now the debit side opening balance on 1st January 2005 to bank account, it's the purchase, the machinery purchased rupees 5 lakh. Okay, so at the end of the year we have to reduce the value of the assets. Okay, at the end of the year means on which date it will be the end, on 31st 2005. Okay, to reduce the balance of this 5 lakh, it's because percentage is given. Okay, how high we have to reduce, because after using 1 year that assets, particular assets, then we have to reduce the value that. Okay, we have to reduce that value. Okay, suppose if you purchased one mobile phone. Okay, if you purchased one mobile phone of rupees 10,000. Okay, and after using 2 months or the 3 months you are going to sell that. Okay, you will not get that rupees 10,000 only of the price of that mobile. Okay, it will reduce the cost. Okay, it will reduce the cost of that mobile. It means what, you have to sell at rupees 6,000 or 8,000 in between. Okay, so because you used that 3 months. Okay, in the same way like this, if it is used a 1 year machinery for your business purpose, then in the second years you have to reduce that cost of that machinery. Okay, so like that only at the end of the year we have to reduce the 20% depreciation of that machinery value. Okay, calculate the 20% on this 5 lakh, it will be the 1 lakh. Okay, so now which side is getting more balance for this year? For this year 5,000 is amount is getting more in the debit side. Okay, take it as it is, this 5 lakh for the credit side. From this 5 lakh you have to minus this 1 lakh. The remaining amount is rupees 4 lakh. Okay, so this 4 lakh is nothing but the buy balance carried on 31st 12/2005 buy balance carried on. It means what is the closing value of this year. Okay, so now whatever the closing value of this 2005, it will be the opening balance for the next year on 6. Okay, so 1st January 2006 to balance brought down to rupees 4 lakh. Okay, so when it is a opening balance for the 2006. Okay, so what will be the end date? End date will be the 31st 12/2006. Okay, again we have to reduce the depreciation. Okay, so it is a reducing balance method, and so this is the reducing value. Okay, this is the reducing value. Again on this reducing value we have to minus the 20%. Okay, we have to minus the 20%. Now calculate the 20% on this 4 lakh, it will be the 80,000. Okay, 80,000. So now see which side is getting more balance, 4 lakh is more or the 80,000 is more? 4 lakh is the more of the debit side. Okay, take it as it is 4 lakh. So take it as it is in the credit side also 4 lakh. From this 4 lakh you have to minus this 80,000. Remaining balance will be the 3,20,000. So this 3,20,000 is nothing but the closing balance for this 2006. Okay, closing balance for the 2006. Okay, So it will be the opening balance for the next year. It means what for the 2007. Okay, first January 2007 to balance brought down. Opening balance is what 3,20,000. Okay, after using this 1 year, it will be the end with the 31st 12 2007. Okay, it means what again we have to depreciate 20%. Okay, 20% on this reducing value 3,20,000 is the reducing value. So on this 3,20,000, 20% is what the 64,000. Okay, so now this 64,000 we have to minus this 3,20,000. Okay, so because debit side is getting more balance 3,20,000, 3,20,000, from this 3,20,000 we have to minus the 64,000, remaining balance is the 2,56,000. So this 2,56,000 is nothing but the closing balance for the 2007 purpose. Okay, so it will be the opening balance for the next year, which is the 2008. Okay, so 2008 is what's to balance brought down 2,56,000. What's 2,56,000? Okay, so what's the end year of this 2008? It's the 31st 12 2008. Okay, so the depreciation by depreciation amount on this on the reducing balance we have to calculate the 20%. Okay, so 20% on 2,56,000, it's what's the 51,200. Okay, so now see this amount you have to minus from this amount. Okay, because he is debit side getting more balance 2,56,000, 2,56,000, 2,56,000 minus 51,200, remaining balance is what 2,04,800. Okay, so this 2,04,800 is the closing balance for this 2008, but it will be the opening balance for the next year, which is the 2009. Okay, so now see on 1/1/2009 to balance brought down 2,04,800. Okay, so this 2,04,800 for the opening balance for the 2009, but it will be the what's the closing date for the 2009, 31st 12 2009. Okay, so it means we have to reduce the value again the 20% on this reducing balance. Okay, 2,04,800 into 20%, it is the 40,960. Okay, so now which side getting more balance? Debit side getting more balance 2,04,800, 2,04,400 as it is. Okay, so from this balance we have to minus this 40,960. Remaining amount is what 1,63,840. Okay, so this is the closing balance for the 2009. Okay, so in the problem what's they mentioned till 31st 12 2009 we have to calculate. Okay, so whatever the remaining balance, it will be the opening for the next year. Okay, so while closing the I think you are getting the confusing while closing the accounts. Okay, so now see, this is 1st January 2005 up to this. Okay, this is the first year. Okay, so at that while closing, so this is the ascertained amount. Okay, so this is the ascertained amount. Okay, so for the 5 seconds just avoid this amount. Okay, so only just keep in mind 5 lakh and the 1 lakh. Okay, so don't take in mind 4 lakh. Okay, so now see how it is, how to close. So you have to see which side is getting more balance. In the debit side 5 lakh amount is there, in the credit side it's a 1 lakh amount is there. Okay, so it means what, which side is getting more balance? Debit side. So this 5 lakh as it is you have to take here, and so this 5 lakh again we have to take as it is in the credit side in the same line. Okay, so from this 5 lakh you have to minus the credit amount. Okay, credit amount is what's 1 lakh. If it is you minus this 1 lakh from this 5 lakh, remaining amount is what's the 4 lakh. So this is the ascertain amount. Okay, like this you have to close. And suppose if it is this 5 lakh is here in this 1 lakh and this 1 lakh is here, so which side is getting more balance? Credit side. So 5 lakh we have to take here, and as it is we have to take here, and from this 5 lakh we have to minus the 1 lakh. Okay, it will be the closing. Like this we have to solve. Okay, don't get confused while closing the accounts. Okay, so I hope you will be understand, and it's very important for your internal marks, internal exam as well as the final exam oriented. Okay, so it's very important. And I sent 2 years question paper. This is the previous question paper. Okay, so this previous final year's question paper. Okay, so final exam. Okay, just try to solve that. Whatever I covered the syllabus, just try to solve. If you have any doubt, you can contact me. Okay, so thank you, have a nice day.